We are.
Excellent. Thank you very much, James. Okay, well, if I can formally welcome people to the meeting, and could I ask at this point, James, if we've had any formal apologies to the meeting?
We have Karen Murray sent her apologies this morning. Campbell is here on behalf of Mazars.
All right. Thank you. Thank you for that, James. Okay, that takes us to item 2, declarations of interest. Members are required to declare any personal, prejudicial or disposable pecuniary interest that they may have relating to items on the agenda and state the nature of such interest. So if I just pause there, if anybody needs to make a declaration, please do so. Okay, we'll take that as no declarations. Thank you. Right, that takes us to item 3, minutes of the previous committee meeting. So if we just look in the packs on page 3, which is the first page of the minutes, could I ask for any changes, amendments to that page, any members? Okay, over to page 4, page 5, page 6, 7, 8, and finally page 9 of the pack. Any changes, amendments from anybody? Okay, all right, okay, thank you. So we'll take that. So we'll approve as a correct record of the minutes of the Audit and Governance Committee consultation held on the 16th of September of this year.
Agreed.
Very good, thank you. Okay, item number 4, monthly operating report, and I believe, Ian, you're going to take us through this one. Okay, I think we just got muted on here.
I have, sorry, I was just noticed that. This is actually September's report. There is a new one that's due out imminently. I mean, I'll come on to the main thing that is mentioned in this September monthly operating report, which is the reference to the delay to the IRP. I think people will probably be aware that the IRP was released yesterday, so I'll come on to that in a moment. I think generally speaking, across the rest of the organisation, and what was brought out in the report is the kind of progress that's being made. So there's progress being made on a variety of fronts. Working with the Great British Railways transition team, just to understand how TfN will fit into the new arrangements on the railways that were set out in the William Shapps review. Collaboration on the Manchester Central Task Force in terms of timetabling, obviously around Manchester, but more broadly across the north as well, because obviously, as we've discussed previously, what goes on in central Manchester has knock-on effects all across the north. Development of policy that's continuing, so the combined train service specification, the freight and logistics strategy, finalising the decarbonisation strategy, which should be going to board, or is going to board, I think, for approval in a few days. Likewise, the major roads report, which is also going to board in a couple of days as well. I think just before I come on to IRP, there's probably a couple of other things as well. The IPBA is progressing, so this is the evidence base that actually looks at the investment programme that is derived from the strategic transport plan, and seeks to just clarify and provide the evidence base that shows what the benefits of those projects will be, and delivering those projects as a programme. We've also, I mean, the funding position is the same. We're still not any clear as to what the funding will be for next year. We've had discussions with quite senior departmental officials, and it is looking like January is going to be the date when we get that. Now that actually was highlighted as an issue in the spending review submission that we made to the department. I think it becomes doubly an issue, and this point has been made to the department within the last 24 hours. Now we've had the IRP come out. So I don't know, it's probably worth me pausing there and just seeing if anybody's got any questions or any comments on anything that's in the monthly operating report before I just pick up on the IRP.
No, I'm not seeing any requirements there.
Yeah. So I think the as I say, the key thing I think just to pick up on in terms of monthly operating report is that what was flagged in that report that you have got as a delay to the IRP there's now no longer delayed. Obviously, it was released yesterday. Now, I think it's fair to say it's not been released to general acclaim within the North. It doesn't do what TFN members had asked for it to do in terms of the statutory advice that was provided to the Secretary of State. And I think there are clearly going to be discussions and points being made across the piece over the next few days. I'm not going to try and describe what is in it. I'm not a technical person and I'm not an economist, so I'm not in a good position to be able to describe the actual substantive effects of the IRP. I think what I can say is that it is going to have some, or it implies changes to the delivery model of MPR. In terms of, it implies changes in terms of arrangements moving to a sponsorship model rather than a co-clienting model. That could well have TUPE implications for certain members of the team and the programme team, but it also has implications both for TFN's core operating model and for its core budgets. Now, at the moment, given that it only came out yesterday, I'm not in a position to say in any great detail what those effects will be. We're trying to get meetings with the departmental officials where we can discuss the plan of what is actually intended, because whilst the kind of high level aspiration for what is intended is known, I don't at this moment have any particular detail as to what underlies that. Certainly not that's being presented to us in a way that would allow us to do any detailed planning of our own. So I think it's probably worth pausing there. I'm sure people have, I know people have been thinking about this over the last 24 hours, but it's probably worth pausing there. I may or may not be able to answer any questions people have got, but I'm happy to take them. I can always take them away.
Thank you, Ian. Have we any questions from members? No questions at all. Okay, well, I think it's fair to say in that it's very, very early days, and I guess people are just digesting the impact of this at the moment. I have a question now from Kevin, if you'd like to go on, Kevin.
Well, yeah. I mean, just picking up on the letter yesterday and obviously IRP announcements. It clearly now changes this sort of risk environment quite substantially, I would have thought, Ian. And clearly, you're not in a position to respond to detail at this point. But I suppose from this committee's perspective, there are huge question marks against the future. I would have thought the future operating model. So I suppose my question is more about, and I acknowledge that you've only had less than 24 hours to consider implications, but I suppose my question is about, the next steps really, and engaging with this committee and what, if anything, we can do to sort of help over the next sort of quarter period.
Yeah. I think there's probably a logical kind of process flow we have to go through, Kevin. I mean, the first thing is we need to understand what the DFT's plan is in a bit more detail. So exactly what they see the end state being, and some of that comes back to funding, and some of it comes back to actually who they want to carry out work. I mean, I think we've then got to take that back to our members, because I think there's, this is a two-sided dialogue, and we've got to understand what the department wants, and then we've got to try and understand what members want, and try to come to an operating model that kind of meets. There's clearly some there's a reference in here to a co-sponsorship model rather than the co-clienting model. I'm not entirely clear what that means at the moment, or the level of resources that would be required for that, and how those would be funded. At the moment, the MPR team is funded through the programme funding, not the core funding, for instance. So I think once we've got that, then we need to start thinking about the business planning process, which we've started already. I mean, we have been doing prioritisation. Obviously, this means that we're going to need to think about that prioritisation through a different lens. We are still missing the other bit of the jigsaw, which is what the core funding allocation is going to be, and it's unlikely that we're going to get that before January. Although I have made the point that if this is going to get sorted out to any reasonable timescale, we could really do with knowing what that core funding allocation is going to be prior to that. But I think that there is probably some iteration to be done with the department around what we actually need to, for things like the co-sponsorship model, and then we're going to have to work through the business plan. And the organisational implications for that, and that's going to have to go back to the board. But there's a whole series of processes that we need to go through, HR process, staff processes, in order to make those kind of changes to the organisation. I mean, it is coming back to the underlying point in all this, that we need to get a funded budget set by the start of the new financial year. It doesn't give us a huge amount of time, and if the core funding doesn't land until the beginning of January, then that just makes it all the more challenging to get that done to the timescales available.
Okay, thank you. Thanks, Ian. Yeah, appreciate the difficulties as outlined. Are there any other questions from members? As I said before, early days, difficult to see the impact yet. Okay, all right, Ian. I don't think there are any further questions from the floor. Have you got anything further you want to say about the monthly operating report?
I don't think I don't think there's anything else. I mean, it's fairly detailed report. If anybody does have any questions, of detail, feel free to just drop me a line, and we can look into those for people. But no, I've not got anything else to add, Chair. Okay,
thank you, Ian. All right, in that case, can I move on, please, to item 5, which is internal audit update. Andrew, are you doing that one?
Yeah, I'll talk through the 2 reports, and we've got Lisa here as well, who will talk through the progress paper. So if I start in terms of first, it's the purchase to pay audit report. So this followed on from our work we did last year around the new electronic commissioning system, being careful that we didn't duplicate any work in that area. So we were focusing on employee expenses, procurement cards, goods receipting, and we noticed that really positive outcome in terms of the assurance opinion provided, and the key action to pull out that one region action around, and just that check of procurement card statements. I think it goes back to kind of some procedures that have changed during COVID, stuff that was previously done in offices with physical signatures is now changed, and so it's just a case of ensuring that those checks are done, whether it's electronically or different while working remotely. But so happy to take any questions on that paper.
Okay. Any questions from the committee at all? Anything at all? We did have some correspondence from one of our independent members, Graham, who I believe asked a few questions between the meetings. I just wanted to, if Graham's on, just to confirm that you're happy with the responses, and if there are anything, any other questions which you've got, Graham.
Graham's got his hand up, Chris, to speak.
Okay. Yeah. All right then. Thank you, Graham. If you
thank you, thank you, Chris. Yeah, and thank you, Ian, for the response, and Andrew for summarising. The point that I was keen to make. I think some of it is perhaps stylistic, in that when we read an audit report, I think over the last few years the drive has been to produce exception-based reports, and so sometimes you do lose a little bit of the context within which the opinion is being presented. So I was really just keen to understand from Ian, and you know, this is why I sort of communicated prior to the meeting, just to understand whether any of the issues that were raised within the scope of the audit were also things which TFN were concerned about or focused on across other processes. And thank you for responding to that, Ian. And I think from your perspective, everything seems to be operating as intended elsewhere, which is good.
Okay.
Yep.
That's good. Thank you. Thanks very much for your comments. Thanks for the responses. I think we can go back to you now. If you want to pick that up at all, Andrew.
Yeah, thanks very much. Yeah. And the next report is in relation to the flexi-time system. So you may remember that this has been on the internal audit plan in previous years and has been deferred whilst the new system was in the process of being procured and implemented. So that new system has now been in place since April. We've tested all around the controls within the system, how they align to the flexible working policy, and in large, there are findings where that the system is operating as it's intended, so it's doing exactly what it is designed to do in terms of ensuring that flexi time is recorded, the maximum number of days that can be booked, they're taken, all those procedures. So there was no actions coming from our report. So again, happy to take any questions.
And if I may add to that one, just in terms of what Andy's just said, I think the data analytics in this report clearly gives you that assurance in terms of those findings that have been made, which has been able to look at like a representative kind of the sample that you've got in place and how the authorisation levels are working within TFN to ensure that people aren't exercising, the flexible policy outside of the current arrangements that have been approved.
Good. Thank you very much for that reassurance. Very helpful. Question from Kevin, and then one from Graham. Okay, over to you, Kevin.
Yeah, it was just in terms of assurance around home working. There's no explicit sort of reference across the 10 samples to home working. So I suppose I'm just seeking some assurance around control measures for that sort of flexible way of working alongside the flexi scheme, and was that something that you were able to pick up on and provide assurance to the committee, Andrew?
Yeah, as far as I understand it, it's the same methods in place. So if you're working in the office or remotely, it's the same process for inputting your time within the system. So it records it in exactly the same manner. So it again, we were to see that, yeah, the system was doing what it was intended. So I don't think there was any concerns in terms of people using the system, whether it's at home or at the office.
Okay, thank you very much.
And clearly there will be controls over line management in terms of people working from home. As we all know, that balance of what the outputs are for that time whilst not in an office, where previously, you see your colleagues, you talk about what you're working through, etc., don't you, in a visual way now than it was in person.
Okay. Graham, did you want to ask a question?
Yeah, thanks, Chris. Only really to also highlight that I dropped Ian a note on this report as well prior to the meeting, and similar, I think, to Kevin's point. It was just I was keen to understand beyond the sort of mechanical workings of the scheme, which is great to see, as Lisa made the point there, that there is sufficient evidence that the controls and the process are operating as intended. It was really just to seek some additional assurance around what if any were the knock-on effects of adopting that particular way of working, which, you know, it may be common within certain public sector organisations, but it's certainly not common within many private organisations. So it just seeking to understand the context within which that flexible working process works. But Ian was kind enough to provide some additional assurance in his response. So thank you.
Excellent.
Okay. Thanks for that. Keith, did you count?
Yeah, it's not really a question. It's just mostly a comment. I chair a citizens' advice in my local town. And of course, during the pandemic, we have had many of our officers doing home working, where they're receiving calls and dealing with the calls and transmitting the answers and the responses back out and then feeding them back into the office. Just one thing that I raised it within the meetings that we have on a regular basis is that some of these devices that people have in their homes for playing music and one thing and another, there is been some reports out through, I don't know, that people can monitor them and people can listen to them. And therefore, within citizens' advice, if you're dealing with private matters and private concerns, you can't afford to have that. So we had to just let people know that if they had these devices in their homes, they shouldn't be in the same rooms where they were answering personal calls. So it's just something else that's out there. We just need to be aware of, that's all. But I'm sure it's something that's been picked up on, Chair.
Thank you. Thanks for that comment, Keith. Okay. Yeah, just another aspect to it. Okay, perhaps we note that. Can I just bring Ian in at this point, please?
Yeah, I was just to say, I don't have any of those types of devices, although, you know, apparently somebody with the right software can record you from your mobile phone, even if you've not pressed any of the buttons. So I guess it depends how you see the risk, but I know the kinds of devices you're talking about, Keith. I'm not aware of any specific guidance, so I'll have a look at the policy, maybe pick up with HR just to see if there's anything we need to do about that.
Yeah, I don't have one either. My wife does all the talking in our house.
Thank you. Thanks, guys. Appreciate the point there, Ian. We'll look into that. Just taking us back to internal audit then.
Certainly, thank you very much. And then the final paper that we have today is obviously our progress paper, which you're accustomed to, which in effect gives you a summary of where we are in terms of completion of the 21-22 report. So clearly it confirms what you've received today and presented by Andy. It confirms that obviously the scoping for remaining work, etc., is on track as it has been during the year. We pull out any kind of themes you'll see within this report at section 2.2, which is on page 67 of the pack that I've loaded. We just talk about the themes that come through, and when we've alluded to them to be about governance weaknesses, you'll see that the highest number came under that category, but that was a specific governance effectiveness review that we did. So we didn't want you to look at the numbers and think, my goodness, governance weaknesses across the board at TFN. That's not the case at all. It's as a result of the findings from that specific review that we did earlier in the year. And therefore, progress is good. We will be completing the cyber review, and that will come to you at the next meeting. And then clearly there are a few updated, what we call technical matters, which we've included in terms of employment matter documentation, which I think are a useful read. Picks up a bit about that hybrid and flexible working, the tax considerations that need to be made. So that's our progress report. So thank you very much.
Thank you. Any final questions to internal audit from anybody? No, good. Well, thanks very much indeed. Oh, one from Ian.
Yeah, Chair, can I just say the next meeting is obviously February. The committee will need to agree the internal audit programme for the following year. Obviously, we normally go through a process where I discuss it with internal audit, I discuss it with yourself and the vice chair. If anybody's got anything specific that they think, any of the members have got anything specific that they would like us to think about including, then by all means let me know. And we'll play that into when we're developing the programme.
Good, thank you for that. Yes, please note that. That's helpful. Just on the cyber, I think you're starting that in January. Is that still the plan? Yeah, good.
That's
good.
correct.
Okay. I've got a question coming in from Kevin, I think.
Yeah, just a quick one, really, in terms of follow-up on management actions. Is that a report that we'll get towards the end of the financial year or in the first quarter of next year?
I can take that one. This year we did it. Traditionally, we'd do it towards the end of the year. This year we did it early, so we did it at the start of the year because there was some actions around cyber, GDPR, contract management, and we just wanted to see how well they had been embedded before we made a decision on whether we progressed with a cyber or GDPR audit later in the year. So that was done around April, May time. So we may take the same approach again last year, so we're not having too long a gap between follow-up reviews and build it into something that we do early on in the year.
Okay, thank you.
Thank you.
Any final questions for internal audit colleagues? No. Okay, thank you. Can we now move on to external audit, item 6, please?
Thank you, Chair. Morning, everyone. Yeah, if I could just take you to page 4. This is our regular progress report. And it's just really to give you an update of where the audit's at the moment. So members will recall we presented our audit completion report back in the committee in 16th of September. And we shortly after issued our unqualified opinion on the financial statements on the 30th of September, which is obviously positive news. And I don't know if anyone saw the PSAA report, but there was only 9% of opinions given across the whole of the UK, across all firms. So you're in a very small group, I would say, for getting your opinion signed at that time. So really well done to your finance team, and thank you for the cooperation of your finance team as well, because we can't complete these audits without a responsive finance team during the audit. So thanks for that again. You'll remember that our audit completion report mentioned that there was a delay to our audit value for money work and also the whole of government accounts. In terms of the whole of government accounts, we haven't had the guidance yet from the NAO. We're expecting that in December. You'll be pleased to know you're below the threshold for detailed testing. So it's a fairly quick process. Once that guidance comes through, we'll be able to complete that work. As I say, I expect that in December. In terms of the value for money work, there's updated guidance from the NAO, which gave auditors an extension to produce our annual report no later than 3 months after the opinion signed. So that would mean at the very latest we have to prepare that for yourselves by the end of December. Ideally, we would like to have done this earlier, but our focus at the moment is to make sure we're giving ourselves enough time to do the quality assurance processes and consistency, and at the same time finish the opinion work that we've got across a number of our public sector clients. So in terms of that process, I'm planning to issue the auditor's annual report sometime in December, hoping to issue a draft in the next 2 to 3 weeks, actually, if I can get round to that. So you should receive that. So the consequence of the whole of government accounts and the value for money work is that we can't issue the audit certificate and we can't close the audit until those 2 pieces of work are complete. We don't anticipate we're going to do a lot of work. All it'll be is just updating from the position back in September to the current position, and obviously taking into account the government's announcement yesterday as well, just to update that in our report. So, I mean, at the moment, we don't have any significant weaknesses to report. So that is the positive. I mean, I'm happy to take sort of any questions on any of that, Chair. The rest of the report is some national publications which may be of interest to members, but I'm not intending to go through those in detail. Happy to take any questions on that report, Chair.
Okay, thanks. Let's just throw that on to the floor then. Anybody got any questions? Can't see any. Just one from me, really. I suppose there's a few unknowns in terms of timings there. I guess for the final audit report. But are we kind of looking towards the end of December? Is that where that all leads to?
Yes, I mean that would be the very latest, Chair. I'm hoping to get a report out in the next, as I say, 2 to 3 weeks. I would hope to agree that by about mid-December and have that finalised by mid-December. That would be my plan.
Okay, that's helpful. Thank you for the update. You just referenced the publications there, and I noticed one of them was actually about cyber security, and with particular reference for audit committees. So that's useful. So thank you for including that. Appreciated. Although I have to say, when I tried to get on it, I couldn't get on it. So so perhaps that'll get fixed.
Let me know if there's a problem, Chair. I mean, I have got a link. I have been on there myself, so I know the link I've got works. So please let me know through James or if there's a problem.
Thank you. Appreciate that. Thank you, Campbell. Okay. Any final questions for external audit? Can't see any. Fine. Thank you again. In that case, can we move to item 7? And this is the preparation of the annual governance statement. And Angie, are you doing that one?
Yes, I am, Chair. Thank you. So just very briefly, it's a short report and it's sort of reporting as in previous years. Sort of the first report to the committee on preparation and review of the annual governance statement. As you will note, the report sets out the process that will be followed in carrying out the annual review, and that will include review of policies and procedures that TFN has put in place in relation to financial management, procurement, risk management, and all to identify any areas for improvement. In carrying out the review, TFN will obviously comply with the guidance issued by CIFA on the 7 principles of good governance, and officers will assess TFN's activities and provide evidence on the way in which TFN has conducted itself in accordance with these principles. We have already briefly heard from Ian on the publication of the IRP. So the review will also take into account and consider any associated impact on the annual governance statement. And of course, that will be included in the draft form. So as the report says, a further report will be brought to the future meeting for members to review the draft annual governance statement with the final statement to be brought to the committee for approval and recommendation to the board before the publication at the end of May 2022. So, Chair, therefore, the recommendation is for the committee to note this report and the intended timeline set out in the report. Thank you.
Okay, any questions at all on that? It is a process which you go through every year, and the paper itself develops during the year as we iterate it. So there will be opportunity to do that. But at this point in time, yeah, no questions, but we do note the process is underway. Actually, I just had a quick possible question from Graham Bell. Okay.
Hi, sorry, thank you, Chris. In terms of the process and the visibility that the board have of any challenges that are raised, just as a matter of interest, do you also report the detail of the challenges that you've received, or do do you only report the conclusions of those challenges? The reason for asking is that there's sometimes quite a valuable dialogue that takes place outside of the report, which can be lost, and it can remain invisible to the audience, which it's sometimes helpful for them to understand the process that we've gone through.
Okay, Chair, could I refer this one to Ian, please? Because obviously he's been through the process a few times before. Yeah,
so I think in reality that's probably not the case. I'd need to go and have a look at the reports that were provided to the board in terms of the annual governance statement, but I think in reality what they get is the finished article as part of the financial statements. Now I would have no issue with putting a bit more detail in around any discussions that have been had. It'd certainly be consistent with what we're doing with Scrutiny Committee at the moment, for instance, whereby we have specific section in reports that draws out Scrutiny Committee comment, so board can see the deliberations that they've made. So I would have. I'm not sure we've had any major kind of issues or disagreements in terms of developing the AGS to date, but I certainly, Graham, would be happy to include that in the report that goes to board.
Yes.
Thank you for that.
Yep, no, that's a useful comment. Thank you very much for bringing that up. I mean, we have some flexibility in terms of how we go about putting that report together and what we include in it. There are some, I guess, must-dos in terms of that in the way we answer the questions, but there is a flexibility in how much detail we put in there. So yes, we'll take that point on board, and I guess the team will look at it. Thanks very much for raising that, Graham. If we can take any further questions. No, I think we note it, and we'll keep developing the reports as we go. Thank you very much indeed for that, Angie.
Thank you, Chair.
Okay, if we can now therefore move on to item 8, which is the financial update, and I think Paul's going to take us through that one.
Yes, Chair. Chair, if that's okay, I'll share my screen, just because I think sometimes referring to a table within the report brings the numbers to life a bit more than just verbal communication.
Thank you.
If someone could just give me the nod when they see the screen has been shared, it'd be great help.
Yeah, we've got it now.
Okay.
Can everybody see that? It looks quite small on my screen. Paul, you might just want to make it slightly bigger. Yeah, that's better good for me.
Okay. So I mean, there are 5 matters being considered within this report, split between the 4 subsections within the purpose of the report. So 1.1 covers two areas, which is the 7-month performance to October, and the second area, which is then taking that 7 months and building on the remaining forecast for the year to give a best view of what we anticipate the outcome for the year to be. We actually we would normally have done that. We normally do it at the end of the half year, the end of September, but because we had a particularly, I suppose, big October, we wanted to see the results of October to see if its effect it could have or would have on the full year forecast. The third area within the report on 1.2 was just bringing the members up to date with a bid that's been made on the 20th of October. We'll come on to that in a second. We'll come on to the detail of all these in due course. The fourth area was a constitutional point, which we updated a half year on. We do a treasury management update to give an indication of how we performed in accordance with our treasury management strategy. And the final point is in relation to the appointment of our external auditors using what's called the PSAA, which is a public sector audit appointments body. Again, I'll touch on that briefly in a moment. So just going back to point 1, again, I think possibly hopping to a table is quite useful. So in terms of the year-to-date position, the table reflects that. So we had actual expenditure of 30.9 million, which is in column 2. against a budget of 33.9. As can be seen from that, the analysis, the majority of the variance, as in 2.4 million of it, falls within Northern Powerhouse Rail. Ian mentioned before the IRP, and the delay in the publication of the IRP significantly affected the ability of the programme to deliver its activities. Again, members may well recall that when we constructed this budget back when it was agreed back in March, the IRP was anticipated around fairly soon after that point, and then has been subsequently delayed until actually yesterday. There are other minor variances against the rail operations and operational areas, and also IBPA, which are all co-funded, but these are specific areas that are they didn't occur in October or year to date, but they're anticipated to incur within the remaining months of the year. So again, it was a useful exercise to go through to bring in October and to give us a degree of assurance around the full year forecast, which we can come on to now. In terms of the full year forecast, again, this table demonstrates the transition from where we were in the budget to what we had in revision 1 and what we're proposing in revision 2. Again, hopefully members will recall in column 1 we've got the budget of 78.7. That's a gross budget, because obviously that contains a contingency of 18.5 million within the NPR budget. Revision 1, which was completed in July of this year, that the main effect of that revision was to strip out a significant chunk of the contingency within NPR as a consequence of the delay of the publication of the IRP. Most other areas, with the exception of a very small adjustment between rail operations and operational areas, remained the same. In terms of going from Rev 1 to Rev 2, and Rev 2 was compiled in the last few weeks. Again, looking at the penultimate column, what members can see is the variance between Rev 1 and Rev 2. And again, members will see that the lion's share of the variance and the movement of the 7.24 million is in relation to the NPR programme through a combination of the reduction of the committed budget of 2.86 million and also the removal of the NPR contingency. This isn't to say that these are gone, and if the IRP allows activity to be accelerated, we'll have the capacity to increase the budget at Rev 3. So that's always there. Moving on to the third point is in late September, the department approached us and indicated that they had effectively spare capacity and spare grant to progress a number of key agenda items for them, which were the items that are bullet pointed in 1.2. We compiled a bid, and the bid submission was made on the 20th of October. It was just over £750,000. That's a gross budget including VAT, to meet the various areas that are bulleted within there. Now, we've been given a steer that it would. I suppose the request was not 100% clear. They didn't say, well, you can have X, Y, or Z. I think the steer was around several hundred thousand was the anticipated, or was the steer that we were given with regard to the submission. We haven't heard back yet, but to the extent that we do hear back, this would be a ring-fenced budget to be incurred both in the remaining part of this year and the early part of next year. So again, it's not something that would be available to do anything other than the activities that are prescribed within the bid submission that's been made. So we would hope to be able to update the committee at the next meeting as to what the outcome of that bid submission was. The fourth area was around treasury management strategy and compliance with the strategy as prescribed within the Constitution. Section 7 of the report details all the various performance measures that we track in relation to treasury management, and hopefully members will also recall that because yields are so low. I mean, in some cases they're actually negative, and they were negative occasionally during the year. The focus is on security and liquidity. Those are the two key focuses. We couldn't afford to expose ourselves to any risk in relation to security. What members will see in relation to Section 7 is that we were fully compliant with our policy. There are occasional spikes above the the balances that are held in Barclays, and the reason why they're there is because we get receipts that come in relation to the MPR programme, and we don't factor receipts into our investment strategy because we're not always 100% certain that they would arrive, and therefore we don't want to jeopardise our ability to pay. So we factor those into the next investment cycle we make. And members will also note that we only invest with the DMO, which is the Debt Management Office, and effectively that's it's a government organisation that therefore enables them to effectively reduce their debt requirements. So effectively it's flowing money back to the very people who give it to us, I suppose. And the final point is around the PSAA. So this back in 2018 we appointed the PSAA to. They're an organisation that's set up to appoint public sector auditors and external auditors, and we had them in place for the 5-year period from 2018 up to 2023, and we're in that cycle now where we need to consider the renewal of that for the following 5 years. They take away all the management of the external auditors. They enable they appoint the auditors, and they also negotiate the fee structure, which again is I suppose the benefit of doing it as a collective is far better for us as an organisation. And interestingly, actually, this year we received a rebate for all the previous years. It was a sum of 6,000 came back to us that wasn't expected, but it's always nice to receive something that wasn't expected, and that's a rebate for previous years. So we're recommending to the appointment of the auditors. Sorry, the appointment of PSAA. Requires full board approval, so we are recommending that is taken to the full board for approval on it's next week. So that's about it really in terms of financial update. Quite a bit in there, but I'm just thinking actually we probably didn't focus too much on revision 2, did I? Essentially in terms of revision 2, if I could just go back to that, the focus on revision 2 from an MPR perspective is to drop the committee budget, but from a core budget perspective is to hold those budgets effectively at the same levels in aggregate. There's a relatively modest variance between rail operations and operational areas, but what we're saying is that we are proposing to meet the equivalent of our budgeted requirements at the end of the year, and that's quite an important position to make because in members may recall that in previous periods that we didn't always hit the targets, and reserves started to go up and up and up, and perhaps the department looked at the reserves, and that may well have influenced their view on core allocations going forward. So we were very keen to keep the foot on the gas with regard to the activities that were in the business plan, and if possible, and through the varmint process that we've swapped activities out and replaced them with activities that are in the business plan that enable them to be delivered in year, and therefore send the message out to any external stakeholders that our budget targets are being met and the activities within the budget are being delivered. That's about it really. That's the sort of key messages, which happy to take any questions, and equally if there's anything, Ian, if there's anything you think I've probably not focused on that I probably should have done, happy to take a steer from yourself. No, that's fine, Paul. I think it's probably worth going through, Chair, in each one in turn and just seeing if there's any questions or comments from anybody under each of those points. Because I think I probably have got a couple of things to add on some of them, but it's just how we do it in a way that isn't just me launching lots of information on top of the information that Paul's just provided.
All right, let's pick that up then. So the first item was year-to-date position. Any comments on that? Can't see any. Budget revision 2.
Yeah, I think it given the scale of MPR and the uncertainty around IRP, I think we've taken a revision 2 to the board on the 24th. I can't put my hand on my heart and say what the situation is going to be in relation to Northern Powers Rail, certainly. I think most of what is in we've done a little bit of work in the time available. I think most of what is in the Rev 2 for the core, I think is independent of MPR, certainly kind of immediately independent of MPR in terms of the teams are on with the work. So I would hope that it didn't have too much of an impact. What I couldn't say is how the process of actually implementing whatever comes out of the IRP might have knock-on consequences into the delivery of core budgets. But I think that's probably something we'll be clear about once we get to revision 3, which will be back into January.
Okay, thank you. Can I just bring in Councillor Scott there, please?
Yes, thank you. It's just after what Ian has said, when it goes to the board, Ian, will there be a comment added that obviously because of the not really knowing what's going to happen with Northern Powerhouse Rail, that I think that what we're putting forward is realistic, but obviously there may be some changes, and it might just be worth a comment when it goes to the board meeting.
The papers, unfortunately, because of the timings of this committee and the board, the papers have already gone. But I was going to in my preamble just I think by that point I should have a little bit more clarity. I'm not saying I'll be able to be entirely clear, make the board entirely clear, Councillor Scott, just because I don't think I'll necessarily be clear, because we need to get the information from the department. But I was hoping to give some greater degree of background that would allow people to understand where we might end up on for the full year. I mean, I think this is all key to understanding the kind of future arrangements for MPR as well. So I know there's a paper gone for future MPR arrangements or some title of that type. So yeah, I'll make sure we have more information by the time the board comes around.
And maybe just to comment that this was actually raised here within the audit committee, and that we're supporting whatever you putting forward. Yes. Okay. No, I mean, I can certainly do that. Yeah.
Yeah. No, that would be helpful.
Yeah.
Thanks very much, Councillor Scott. Appreciate that. Okay. If there's no further questions on budget revision 2, can we move to the incremental grant claim? Anybody on that one? No.
Just to say, we've not had any confirmation of that as of yet. I was hoping the decision was supposed to be round about now, so I was hoping that we might have something, but at the moment we've got no we've got no news on that. Obviously, that it will also have an impact on the outturn position if we add some work. The later we start this work, the less likely it is that very much will get done before, meaningful amounts will get done before the new year. But that's something else that we'll make to the board. I'm hoping by the time we get to board, we should have more information as to what we've actually been granted.
Okay, thanks, Ian. We just bring Paul in there.
Yeah, I think just one area to add on that, which I think will be of interest to the members, is one of the areas of that was requested that we submit a bid for was for TFN acting as a centre of excellence for other STBs, with the view of taking aboard the very good work that's been done by the TAME function, and not repeating that learning in other STBs. So that looks, if that's encouraged and progressed as we would hope, it potentially underpins the work that the TAME function has done, and hopefully would allow us to continue to provide that service going forward. So that's a key area. The other areas again tend to be more closely aligned to the strategic transport plan and the activities that will be conducted within the strategy function.
Okay, thank you. No further question from Campbell, I think.
It was more for the next item, Chair, that if you'd like me to sort of step out of the meeting, so you can have I appreciate it might be difficult. I'm in the room and you're talking about the external audit appointment. I'm quite happy to sort of step out of the meeting if you want to you know, discuss that.
I think we've probably moved on from there now anyway. Would that be fair? And I think the next item anyway was the mid-year Treasury Management.
I think it's the last item.
Yeah. So can we just deal with that one first, and then perhaps if you step out after that, yeah, that'd be all right. So any just interested if you had any further comments on the Treasury Management side of things. Paul clearly gave us an update and stressed the importance of security. So I don't know if there are any other members' points on that. I'll just open the floor up for a minute. No, I think everybody's happy with what you said there, Paul. Okay, then just take on Paul on Bob Campbell's point. If you want to duck out, if there's any specific questions on the opting into the arrangement. So, anybody got anything to say about that?
I think what I would say is that I think I can't see that the alternative comes anywhere close to this. I mean, this is a kind of grouped arrangement. It takes administrative burden away. It removes the need for us to appoint our own auditors. It introduces us into a collective, essentially a collective bargaining arrangement in terms of fees. Having thought about it some time, I don't think there's any reason why we shouldn't just proceed with this. I think it would be it's the sensible thing to do.
In that case, can I kind of ask for anybody who disagrees with that? Councillor Scott's got a hand up. I don't know whether it's to disagree.
Well, just to say yes, I approve. I think it's a no-brainer. Yeah. It's just a very sensible option. So yes, I agree.
Okay,
yep. Thank you.
Some support therein. Can't see anybody else coming forward to say otherwise. So I think you've got our support as a committee to do that. Thank you. Fine. Anything at all final on the financial update from anybody? Can't see anything. So thank you guys for a thorough report. Very helpful. Thank you very much indeed. And that now takes us on to item 9, which is the corporate risk register. And I think there has been some staff shortage in that area, hasn't there, Ian? So you picking that up?
Yeah, I'll pick it up. I'm just trying to get to the right point in the documents, Chair. Yeah, I'll just to explain. So the previous risk manager left the organisation, and there was a gap. We have got an interim, Tasneem, who I think is on the call at the moment, but due to some unfortunate family circumstances, she's not been able to embed herself in the way that we would have hoped by this point. So I essentially wrote the report, so I'll present it. I may call on Tasneem if there's any questions that I can't answer, but I think that's where we are. What I think is probably worth doing is just, if I share my screen, it's probably not a bad start. Can everybody see that? And is it big enough, I guess? Oops.
Yeah, that's looking all right, Ian. Thank you.
So I think there's probably two things. I'll come on to the detail in a moment. I mean, I think there were a number of risks that people will have seen, which were in the COVID-19 risk, which was really about delays to government policy. That's the key area of that risk that is still really creating an impact. I think it's interesting, or it's notable that in the 18 months since that risk was introduced, the kind of day-to-day risks, the effect on staff or on suppliers or on TFN governance has fallen away. You know, as the vaccination programs kicked in and we've come out of essentially the worst effects of the pandemic. but actually the delay to government policy risk has become ever more pronounced within that particular area of corporate risk. And obviously, at the point at which this report went out, we were still awaiting the IRP. So that IRP delay was really what was driving the increase in risk there. It was also driving the increase in the risk in the TFN reputational and political engagement, and it was also driving the risk in the TFN operations, largely due to the funding impact. So I think it's worth noting that we noted the risk in all those three areas was increasing as time went by, and therefore we were delaying ever more into the new year and delaying ever more or moving ever more towards what is essentially a funding cliff edge. At the moment, I think it is worth stressing we have no indication of what our funding is going to be post 31st of March at the moment, and that we're unlikely to get that even now until January. But the IRP was obviously layering on top of that a lot of uncertainty around MPR. I think it's probably worth saying at a kind of macro level that obviously the timing risk on the IRP has now gone, because we now know that it's there, right? So the fact that it's delayed is no longer an issue because it's arrived. I don't think that necessarily takes some of these risks away, because now we've got a kind of substance risk in relation to the IRP. We're still not entirely clear on what the detail of some of these matters is how that is going to play out. As I said before, we're not sure. We think there's potential for TUPE and the like, but we're not sure quite to what extent or exactly what the detailed effect of that is. And whilst we can probably conclude or infer that there's going to be some changes to TFN's operating model, we don't know what they are either. So I think we've got one step, which is we've got the IRP. I don't think it necessarily improves the risk, the overall risk position of the organisation. I think it possibly sends it the other way. But I think as I go into the next section of this report, I think it's just worth bearing in mind the kind of cross organisational impact that the IRP has. And I think a big part of that is because MPR is such a significant part of TFN's operations, both in terms of the way our members view it and the way we're viewed from outside, how closely tied TFN is to Northern Powys Rail, but also the fact that it constitutes over 80% of our expenditure, as Paul's you'll know from the tables that Paul's just put up, and therefore it is very difficult at an operational level to differentiate TFN and MPR. There are ring fences, but it's very much the ring fencing is very much done at a funding level rather than an operational level, just for means of efficiency and effectiveness of operation. So I think that's probably the key thing I just wanted to bring out to start off with was the impact of the IRP and where the arrival of the IRP actually leaves us. I don't know if anybody's got any questions or comments on that. Because I've got my screen on present, I can only see one person. I can't actually see if anybody's got their hand up. So
well, Graham would like to ask a question. So.
Oh, thanks. Yes. Cheers, Graham.
Ian, hi. Thank you. And maybe to pick up on something that Kevin mentioned earlier. I think in terms of the overall message that members get and the board receives from the risk reporting and the risk register, I think given the ongoing uncertainty and change, I think we should all expect the detail of the risk register to potentially look quite different in 2 or 3 months' time to the way that it looks now.
Yeah.
And appreciate that isn't going to be an insignificant ask on for you and your team to deliver that. So again, as Kevin offered earlier, I think if there is anything that I can do in terms of support, then do please reach out.
Yeah. Yeah, I think you're right. I think there is clearly this is going to impact in all sorts of ways, and some of those ways we've not properly worked through yet. So there is a job to be done to actually to map this risk register across to whatever the new kind of operating context that we find ourselves in. Thank you for that offer, Graham. I will no doubt take you up on that at some point.
Okay, thanks. Kevin, do you still want to come in?
Yes, it's in a similar territory to Graham. I guess, I agree that within the next few months, the risk register is likely to look very, very different. But actually, in the here and now, given what we know from yesterday and the letter, it seems to me that those risks need to sort of be articulated to some degree, albeit with a degree of unknowns around them. But we seem to be moving certainly away from the co-client relationship, which presented us with a lot of risk concern through the last 3 years, as we frequently addressed at this committee. But going forward to sole client and co-sponsor, then I think, if we know that that's the direction of travel, we need to start to look at, I think from this committee's perspective, we need to understand what some of the detail might look like. But actually, it's and I'm in danger of straying into a political arena here, but it seems to me that this is very much now turning into a parent-child relationship between DFT and TFN, and goes to the heart of the devolution sort of conversation. So it seems to me that there's a significant risk around that, and then the MPR withdrawal of, as we say, potentially up to 80% of our current expenditure. Then that's a huge concern, and therefore is of immediate, of an immediate risk nature, it seems to me. So it seems to me, in a long-winded way, apologies for that, but that some of these risks we need to be capturing in the here and now, a bit beyond the board.
Yeah, I mean, I think the board I mean, the last time we formally presented this was March. Was September. I think the board are probably are cognizant of these points. I think you hit on an interesting just point to think about, Kevin, which is one of the reasons, and we've had this discussion before within Audit Committee. One of the reasons that there is so much red on here, and also one of the reasons that the post mitigation impacts or tend not to drop in the way that they would in normal circumstances, is the extent to which we don't control the mechanisms of delivery for the objectives of the organisation. And actually, there is an argument that co-sponsorship is one step further removed than co-clienting, and therefore, that makes it, there's less of a causal relationship between us wanting to do something and our ability to do it. Now, I don't know whether that is a recipe for red risk registers forever if we're measuring against that. Now, at some point, I guess there is I don't know. This needs to be. I think this is one of the things that Graham's saying we need to think through. What are we actually saying the objective is, and therefore aligning the risk to the actual objective. Now, if the objective is still the network that we included as a statutory advice, which it may well still be, and it may well still be that the strategic transport plan that we refreshed says this is what the North needs. I mean, that we said it was what the North needed before. I'm not sure at this point that how far we're going to move from that position. I wouldn't want to second guess the board. So clearly there's a level of nuance and complexity here that we need to work through reasonably quickly, and certainly in time for the board meetings that are going to take place in the new year.
Okay, can I just bring Councillor Scott in there? I think she's got a view on that.
Yeah. Well, just a comment again, and obviously I was in this first briefing this morning with members of the board, and I think they do recognise obviously the risks going forward. Hopefully by the time we get to the board meeting next week, we will have a bit more clarification. But obviously what Martin did say was that he had conversations about the role of Transport for the North going forward. And the comment was that obviously they don't see our role changing that much, but I think we need more clarification on that, because this is the bit that's really up in the air. We, as a board, we really don't know what the position is. So I think that obviously a comment needs to be made at the board meeting once they are clear just exactly what the situation of the Audit and Governance Committee is and what we're expected to do. I think, we're all in this wait and see really, but hopefully by next week, we'll have a bit more clarity, just exactly how it's going to move forward.
Yeah.
Okay. Yeah. Appreciate that. Thank you for that. Yes. It's, I mean, we're just lacking information at the moment. Councillor Scott, have you any further points, or are we happy to move on? Okay. I can't actually see any further questions, Ian, so I don't know whether you
carry on.
Thing to
conclude. Yeah, well, I was just going to, just in terms of I think obviously the not to repeat what I've already said, but clearly the risk in TCR02 around reputation and political, and the same for MPR are IRP contingent. I think clearly there is what was a relatively low risk here needs to be reconsidered, embedding strategic transport plan across programmes. Obviously the strategic transport plan included MPR, so we need to go back and think about that. So I think as I say, there is a kind of multitude of areas where this potentially impacts. I think it also, and this is part of I know work that the strategic rail team is doing, is understanding what the impacts of the IRP announcements are on Transport for the North's aspirations around the classic rail system, because obviously some of the interventions that were proposed in place of the new lines and including NPR and also High Speed 2, relate to interventions on the classic network, and it's just understanding the effect of that on, the risks to TfN's kind of stated objectives. So I think that just to conclude, I think there is clearly the IRP impacts quite significantly on our risk register. I think the other piece of the jigsaw, as I've said previously, is the funding arrangements that come out. Those two things speak to the overall kind of corporate organisation and corporate operating model that we need to move to, and they also potentially impact on individual programmes and individual corporate risks that aren't directly MPR. I probably said sufficient there. So if anybody's got any more questions, I'm happy to take them.
Can't see any more, Ian. So thank you for that update, much appreciated. And we'll wait and see how events develop. But if there aren't any further questions on risk, if I could now move to item 10, which is setting future meetings. If I could just propose some dates at this point, and we need to decide perhaps a mixture of virtual meetings and in-person meetings, but let me just float the dates across everybody for the moment. We're suggesting for next year, Thursday the 3rd of March, Thursday the 9th of June, Thursday the 14th of July, Friday the 6th of September, and Friday the 18th of November. So they're the 5 dates. I'll just run through those again. Thursday the 3rd of March, Thursday the 9th of June, Thursday the 14th of July, Friday the 16th of September, and Friday the 18th of November. So we're quite keen to get these in the diary, and that everybody has very busy timetables, and so the sooner we can set them in for next year, the better. So I'd like to ask people if they could put those in the diary. One thing is clear that if we can do some of these by virtual, then that will be better. Cut down the transport around the place in terms of travel time, etc. Can I ask the management team which ones of those dates they feel that should be in-person meetings?
I think there's definitely two, Chris. I think one is, assuming we're trying to get the accounts approved by July, then that meeting needs to be in person because it's making a recommendation to the board. I think the other one is probably the November one because of the half-year treasury management strategy comes to that committee, this committee. So I think those are the two. I'm happy if Manjeet has got any, as the legal officer on the call, has got any views as to if there are any more. But I think those are probably the two main ones that need doing as meetings.
Okay, well that's useful because obviously people need to put more time in the diaries if they're travelling to where we decide. So that's important that we lock that down, and therefore by assumption the March, June, and September ones would be virtual at this point in time. So probably only need to put a couple of hours in for that. Okay. So they're the meetings. The other point is, and we need to perhaps discuss this more, but I think it's fair that we hold the in-person meetings in two different cities. So that changes the travel for people. I've got Kevin with his hand up, so perhaps I'll just move to Kevin for the moment. Oh, hi Kevin, can't, sorry, just on mute at the moment. Fine.
Sorry. Schoolboy error. Just in terms of quoracy, my understanding is that it's elected members who form the quorus of the committee. So my question is there a possibility for blended meetings where so if take for instance the July meeting where we were saying we need to be face to face, could the independent members, or if that's a problem for us in terms of travelling, could we be accommodated virtually in a blended environment, or does the Act still stipulate that we would need to be in attendance physically?
I think for quoracy you need at least one independent member. So I think the quoracy limits to. The very minimum we need is two elected members and one independent member. So we still need independent member attendance. I'm not sure, Manjeet, if you've got any particular views on hybrid meetings. I know they can be technically quite challenging, and I know that there's a limited number of places that we can get them set up. So I wouldn't want to commit one way or the other to that, Kevin, just at the minute. I don't know, Manjeet, if it's something you could give a view on or maybe take away.
Yes, the current position with blended hybrid meetings is it's still being considered. As Ian said, that there needs to be the required technology in place at the chosen venue. So at the moment, it isn't something available, and we can sort of definitely say whether it will be available at the time, but it is being looked at. But I can take that away and we can look at it further to see what the timing of that may be in the future. But as matters stand at the moment, it isn't an option for a hybrid meeting.
Okay, thanks for that. So that's something further. Can I bring in Vice Chair Keith Little, please?
Yeah, thanks very much, Chris. Just if you could just go through those dates again, because the first one I've checked, is Thursday, the 3rd of March. I've got cabinet all day that day from 10 o'clock in the morning till 5 o'clock in the afternoon. So
Okay.
it's not available to me. But as Ian has said, as long as some members can attend, then that's going to be okay. What was the other dates?
I'll just run through that again. So 3rd of March, 9th of June, 14th of July, 6th of September, and 18th of November.
Well, if those can be circulated and then people can send back in fairly quickly what they're available to do.
Can I suggest we do just that, and then if people say when they can and can't do, James, it's probably worth equivalent
Okay,
play
let's
TV chess.
that's
James can do that.
Yeah, starting with 10.
It might also be useful if people could give an alternative in and around the 3rd. So, you know, I could do the 1st to the 10th sort of thing, but I can do that anyways.
All
Okay.
All right. Well, we've got some dates to pencil in. We may have to rub them out and change them, but at the moment, let's try and go with those with some flexibility, perhaps on the first one on the 3rd of March. And bearing in mind that will be a virtual one, so that should afford a bit more flexibility. Okay. Keith, are you happy if we leave that there and do as you suggest?
Yeah, very happy with that. Thank you.
Yeah. Okay. Anybody else got some points on dates or problems? Right. Well, what I suggest is once we firm up these dates, lock them down, and we'll discuss where we're going to meet for the physical meetings a bit nearer the time, unless that needs to be locked down now. We don't need to do that immediately, James, presumably? No. Okay. All right. We'll deal with that in due course, but unless there's any other business that anybody wants to raise at this point. Can't see any, so just leaves me to thank everybody very much for attending the meeting. Much appreciated. And I'll bring the meeting to a close, and the next one to be advised. Thank you very much indeed.
Thank you, Chris.
Bye, everybody.
Thank you, everyone.
Thank you.
Thank you.
Thanks,
Bye.
Chris.
Bye.
Okay. Bye.
All right.